Good morning and welcome to today's Morning 5 with Fitz. Futures look set for another record level attempt following a weaker day yesterday. Early trading makes me a little less certain. Here's my playbook. Number 1, a quick counter-trend trade idea. Nearly 50 S&P 500 companies are to report. Some of the bigger, more well-known names include Marriott International, Hyatt, Avis, Lyft, Clorox, and more. Under Armour came out of the gate strong earlier this morning and shares are higher on uplifting guidance. At the other end of the spectrum though, tech, energy, and industrials were all lower yesterday, and that makes me wonder if these stocks will save the day or fail it. I'm thinking a few well-placed S&P 500 put options at the open could be a great speculative play. Point number 2, my favorite Virus Plus stock is already ahead of the next COVID wave. The addressable market is hundreds of millions of people and growing by the day because of how fast COVID-19 is spreading and mutating. It's unfortunate, but thankfully, my favorite Virus Plus company, Pfizer, is already ahead of that. Mikhail Dolston, the company's chief scientific officer, said recently that the company is working on a protease inhibitor similar to those treatments already used with great success to treat HIV and hepatitis C, among other things. Critically, the new antiviral drug has a good safety profile and has shown preclinical results suggesting that it could be effective against, get this, all known COVID-19 variants. By the way, the yield is still an appealing 3.55% as I record this too. Great for income investors. Point number 3, buy this stock if you've got $1,000 to invest. I am frequently asked about which hot stocks to buy, but that's a lot like asking a pharmacist which street drugs are going to give you the best buzz. The better and more profitable question to ask is which stocks will be there in 10 to 20 years. If they've got the ability to change the world, even better. Now, obviously, Apple is at the very top of my list, and let me explain why. The ongoing medical pivot that I broke to the world nearly a decade ago still isn't even remotely factored into share price. That is simply amazing considering that the medical market in the US alone could be 3 times the global iPhone market. Most brokerages have done away with commissions and many offer fractional shares, which means there's never been a better time to invest. So, what are you waiting for? Point number 4, avoid these Chinese stocks like the plague. Chinese regulators use unprecedentedly strong language describing online gaming as opium. The Western press has duly picked up on that, of course, but there's a lot lost in translation. Calling online gaming opium invokes a reference to the Opium Wars more than a century ago. It's also a reference, and a thinly veiled one at that, to the need to fight foreign encroachment. China, you see, believes that many of the economic problems it faced as a nation from roughly 1840 to 1919 and beyond resulted directly from foreign encroachment related to the opium trade and addiction. The parallels today are striking. Do not fall for experts who want you to believe that this is a minor inconvenience. Tencent, of course, is getting hammered again. NetEase is collateral damage. DiDi's buyback rumors are false. Alibaba reports later today, but all of these stocks are ripe for manipulation as a result of the entire situation. And in fact, I called them all out just yesterday during an appearance on Barney & Company shortly ahead of the opening bell. You can watch that on my channel. Point number 5, live in California, the cost of your bacon could double. California is implementing new regulations that could double the cost of pork production, which of course means the cost of bacon could rise anywhere from 30 to 50% according to Glenn Stolt, CEO of Christensen Farms. Now, eggs, veal, calves, and more are potentially also impacted. Now, don't get me wrong, I'm all for preventing animal cruelty. However, this article caught my attention because it seems to be there is going to be a wallet-shredding reckoning when it comes to consumer naivete about where and how a huge portion of our food is sourced. Synthetic food stocks? Probably a good bet. Anyway, today's bottom line. Chances are you've heard that the old adage, it takes money to make money. It's simply not true. Anybody can start with no money and, importantly, figure out a way to make it. What's more, the greater the effort you put in, the faster the payoff, particularly when it comes to investing and trading. You got this, I promise. Now let's get out there, lean in, and make it another fabulous day. I'm Keith Fitz-Gerald. I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or Sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.